So here we are with what we have, episode number 29 of Daily Market Mastery with me, popular investor Christian Rauchenwald. As always, in Daily Market Mastery, we use Elliott Wave Theory or the Elliott Wave Principle to try to predict market movements or future market movements in stocks and indices, and therefore manage my popular investor profile that you can, by the way, check out by following the link that you can see here, and it's also pinned in the chat and in the description down below. To manage that portfolio, hopefully profitable. You can also use that link, obviously, to check out my track record. Now, before we jump into things, as usual, the usual disclaimer applies. Everything that I share in this live stream / video, depending if you're watching it live right now or later as a recording, is my personal opinion and in no way financial advice of any kind or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Now, that said, if you're new to Elliott Wave Theory, check out episode number 1 that of Daily Market Mastery that you can find on the main page of the YouTube channel. And also, obviously, use the link in the description below that will allow you to read the Elliott Wave Principle book online for free or get a physical copy, as well as our one-page cheat sheet that is quite useful, that summarizes all the rules and guidelines for wave patterns in one handy A4 page. That said, today we're actually going to look at what we're going to look at. We're going to look at the Dow Jones Industrial Averages and the Russell 2000, maybe only one of the two. And I'm going to cheat a little bit because, as I shared in yesterday's episode, I received the latest episode of the Elliott Wave Theory from elliottwave.com. So by following the link that gets you to the book, you can basically also check out that service. It's the first month $37, and after that $111 per quarter. And then you get the forecasts for the Dow Jones Industrial Averages and other indices from the elliottwave.com team. And basically the people that wrote the book, more or less. And so therefore their labeling is obviously, not without question or beyond question, but on average more, I don't know, I wouldn't say more reliable. They just have way more experience than I do with Elliott Wave Theory. Therefore, trusting their labeling is never or has never been a bad idea. In fact, if we switch to my screen and there look at my portfolio, pretty much the entire 45% gain of last year when there was a bear market and a lot of need to scroll a little bit so you see it. So that entire 45% gain here from last year, where most people lost money. Not gonna point names, but one of the very popular investors would be one girl that uses a buy and hold strategy. Is it loading? Is it not loading? It's loading. So where people lost hugely. I made pretty much the same amount in profit. So there's like 50% profit versus 50% loss. So huge difference. Based on using the Elliott Wave theorist and my own labeling. So this year so far, I understand we are a bit behind. However, as I shared in yesterday's episode, the SPX and the NDX are both supposed to turn around fairly soon. The SPX, in fact, yesterday already had a drop. I mean, it opened higher and then dropped down. And the NDX, where do we have the NDX? Similar, still closed higher. But we expect the top to be in relatively now. We might have a few more losing days before the top is officially in, but then we actually expect to see wave 3. We will see that in Motive Wave, the software that I'm using, that you can also find linked down in the description below in a second. Now, what we need now is basically, we need an index, and let's start with the Dow Jones Industrial. Do I have that already there? I already have it there. Okay, so DJI, where are you? DJI. I have it twice. Okay, we only need once. So, and what we need here is the monthly chart, just so we see an auto and zoom out. So that's how we labeled it. So from very, very long ago, wave 1, wave 2, wave 3, wave 4, top at wave 5, and now we are on the way down. That here obviously is already old. So basically the way it looks here is actually 1, 2, 3, 4, 5 should be like this. I can even use Elliott Wave Theory. Yep, it's leading diagonal. And then in the SPX and NDX, we have a complex corrective pattern, so a combination. It actually appears to be Alt1 AB. Wave 2 in December. Okay, we might need to switch to a weekly chart to resolve that better. I know the points are not adding up now right now, but basically, oh, it's really a short wave too in that case. What's the low here? The low here is like 28750, and so that would be, okay, now it's not doing the points. Yeah, anyway, we switch anyway to motive wave, so, and we jump in the DJI. The only reason why we have trading view is to double check, switching to the monthly chart again, because here we have history obviously since 1897, whereas in motive wave we only have history since 2011. So shouldn't matter much to us. The only important part that we need to draw away, do I have a bigger chart here? Probably not. No, Nasdaq. Okay, we need the other. Would need older episodes of the Elliott Wave theories to check that. Hi Akashi, I hope you're having a great day. Yeah, so, but if we circle back real quick for a second, we can see, so we have data from 2011, that's 20, that's 9, so 11 is around here. And if we label this here, it probably is something like 1, 2, 3, 4, and then wave 5, which means the first correction here should actually take us down almost 50% in the index. Yeah, so where this will be 1, 2, 3, 4, and then 5, which should take us down to the low of wave 4. Assuming that that actually happened and we were at 18,000, we should go down here, or at least into the range of wave 4, where we often towards the end. Now we have only data from 2011. So we just have to keep in mind that the low that we had in March 20 is actually our target here for the corrective wave. Actually not in this case, because we have a bigger scale here, because we actually have our target even further, because that would be our point wave 4. So, and only now I'm like, yeah, like sometimes making stupid mistakes. Yeah. So wave 2 usually corrects into the area of the impulse wave of the wave 4 of a lower degree. Yeah. Now, obviously, the impulse wave 2 here would be the impulse wave of a lower degree would be this one. So that's 4. That's what we're actually going for. So we're looking for a huge crash, wiping out 80% of the Dow Jones Industrial Averages over the next couple of years. Yeah, not in a week, not in a month, but over the next couple of years. Now, for us, what does that mean? The important part is what we can take away from is that we actually go from monthly to probably 2 days for now. So the important part we can take away from is that that here we actually had our point wave 5, and which means from here on out we are looking for, what's the high here? No, what was the D? Wasn't, oh no, that was like Alt D. There we go, cursor data, yeah. So here we have a high of 36934, so that's the high. So we start from this candle here, and that's basically the start of our wave 1. And wave 1 then resolves here-ish. Wave B, nope. Wave 1 actually resolves earlier, so we have a flat corrective pattern here, A, B, C. Yep, that checks out. So, and then wave 2 actually, according to ElliottWave.com, finishes here, which means we're currently in wave 3, and then 4, 5. Yeah, so obviously that's now currently invalid. If we combine that with Kennedy channeling technique, we can now draw a so-called base channel by connecting point 1 and 2 and parallel through that. If you're wondering why here the corrective pattern is actually building a new low, that's because it's a so-called then flat corrective pattern in which wave B retraces further more than 100% of wave A. Yeah, so if it turns out like this, or if that's actually the case, according to Elliott Wave International, then there are a few things. So first of all, or we can confirm a few things or check a few things. So first of all, we can throw a Fibonacci retracement here and check how far wave A retraces. And it's like textbook 61.8 retracement. Yeah, gonna interrupt it real quick to interact with chat. Started reading Elliott Wave Theory. It's tough in there. To be fair, the reading the book online was a little bit annoying for me. Getting the physical copy really was worth the money, because it somehow, I don't know, for me it made it easier to comprehend it. Yeah. However, I feel like the theory is contradicting itself, but then I go back and again, and it was me all over the basic 3 rules. Yeah. Funny thing, I actually watched a video yesterday of Robert Prechter, so the author of Elliott Wave Theory. I watched a video from like 1982 or 85 or something from him, where he actually gave a conference, so training, multi-day training on Elliott Wave Theory. And unfortunately, I cannot share it because it's part of the paid content of elliottwave.com. But it becomes very easy, yeah? So you just have to practice. The only hard part are those fucking corrections, yeah? So that's because corrections can, when you move in the market direction, wave 1, wave 3, and wave 5 are always some kind of impulse or 5-wave pattern, yeah? And they are always so easy to see. For example, yesterday I saw a chart about GameStop, and in GameStop I'm saying, okay, Elliott Wave Theory might not apply that much anymore. Yeah? Now I don't know if it was an hourly chart, but yeah, like let's take this here. Yeah, so just this part here. So without looking at the rest. Now, obviously, if you do it right, you start from the highest time frame, so you know which wave you're in, because then you know how it has to subdivide. Yeah. So if this was wave 4, and then it means we are in wave 5. Yeah, I know we jump back then to the Dow Jones, no problem. Yeah, which means first of all, if that's wave 5, then this is the first wave of wave 5. So we can check, okay, we have a little bit more than 61.8% retracement. Yeah, so that's like one of those cases. We can check really quick if we zoom in, wrong direction. That here, it's going to be challenging actually to label that as a complete wave, because it would be 1, 2, 3, 4, and then 5 would be the biggest wave. Usually 3 is the biggest wave, yeah? So maybe that's 1, 2, that's wave 3. So that actually isn't a finished pattern yet, but that's basically, yeah, so that would be like, so for example, here could be 1, 2, and then we have base channel, breakout from the channel, 3, 4, and now we would be in wave 5. Now, it doesn't look nice, I get that, but that would be a possible labeling. Yeah. Now, if we look here, it depends then also, sometimes it's useful to switch between arithmetic and logarithmic charts to label things easier. Here, it doesn't make a huge difference. But here, for example, also, I mean, you can, there's so many ways to just help yourself by, for example, very often wave 2 will retrace 38.2 or 61.8%. So technically, you can just move it along and see if at some point from some high you have a 38.2 retracement or not. It's not a guarantee that it gives you the right point. You can just try to see if you can fit like 1, 2, 3, 4, 5. Technically, you could fit it, but then you would have to look closer. But point being is like, I mean, yeah, maybe there was a different point where it was easier to label. But yesterday I saw a chart on Reddit where it was so obvious. I just saw the chart and it was like, here, for example, 1, 2, 3, 4, 5. Yeah, maybe with an extended 5th wave. Yeah, or that correction here is an A, B, C flat corrective pattern. Yeah, but you can clearly see 1, 2, 3, 4, and then either 5 here or 5 here. Again, corrective patterns are then the pain in the ass. Yeah, obviously here we go then higher, but so just that's completely out of context. That's between, so that's part of another wave, because obviously then after that we go higher, then we go lower, so that could be part of some corrective pattern that subdivides into a 1, 2, 3, 4, 5. But if you're just looking at the chart and you look here, so all of this doesn't exist yet, you would see it going up, you would see it going down. Okay, you throw a retracement there, even without analyzing the entire chart. Okay, you see we close that, you see we hit the 38.2. If we actually now from hourly go down to, I don't know, let's try 15 minutes. The lower the time frame, the harder it gets, by the way. Yeah? So because then there is just like so much noise in there. But where do we have our, it was before wave 4 point, yeah. So still scrolling. So yeah, if we look here, so we would say, okay, that's potentially our wave 1. Am I scrolling the right direction? Come on, load. Ah, scrolled the wrong direction. Great. Where did I go now? Did I go? So it somehow jumped there now. Back we go. After wave 4, blah. Where was it now? There. Okay, so and now, okay, I cannot zoom in further here, yeah. But if this is technically wave 1, which could be 1, 2, 3, 4, 5, yeah. Then we see we have a 38.2%, or actually 50% retracement in this case here. So 38.2, 50, 61 point would be the average ones. And then you can just say, okay, if you use Kennedy channeling technique is like the key to a lot of things. Yeah, throw that here, and the moment you have a breakout from the channel, you are supposedly in wave 3. Yeah, so when you have a 0.0, 0.1, 0.2 channel, when you have a breakout, you're in wave 3. Yeah, now you get another channel and you put it on 1, and whatever high you have. So if this candle is just showing up, you put it here, and with the parallel through 0.2, our 0.2 would have been here, and you extend it, and if you get a breakout to the bottom, you are confirmed in wave 4. Yeah, now there's no breakout, so we move that point, and we have to adjust for 0.2. So we know here we are confirmed in wave 4. Yeah, and now wave 4 very often will touch the base of this channel or the median of that channel. Yeah, now here it immediately happens. In other constellation, it will not happen that fast. Yeah, but basically the moment you have the breakout from here is where you can buy. And then, yeah, like, I mean, here it's like wouldn't be super profitable in that case for you, or you can wait it out because you would go up here, then you would only have the confirmed wave 4 here, but there's no profits, you might as well wait. It might drop till the median of that channel, but you can wait it out because you know then after that it will have wave 5. Yeah, and to have the wave 5 confirmed, once you have the breakout from the bottom, you take a trend line and you put it on the 0.3, you put it here and you extend it. And the moment you have the breakout from this, you are confirmed in wave 5. Yeah, and then to get the profit target for that, yeah, let's see if we can use Fibonacci for that. I mean, there's obviously a channeling technique as well, but let's see if we can use a Fibonacci extension from 0.1 to 0.3, and let's see how high we went there. So if we draw that here, 138.2, 161.8, 261.8, that would be your profit targets. And you see it perfectly hits the 138.2 extension here from the 1 to 3. Also, if we do it differently, if we put that on 0.5, then wave 4 will often subdivide around either the 61.8 or the 38.2 line. So even before, so either you extend, as said, the Fibonacci from then up, let's do that back like this. Either you extend it from the 1.3 and then aim for the 138.2 to have your profit target here or slightly below, or you can just take this and say, okay, I'm gonna put the 61.8 line on the wave 4 point. Yeah, and then my 100% line is my profit target, which would be 2045, which we also exceeded actually here. Yeah, but if you use Kennedy channeling technique, it's even easier. Then you just take now that you know 0.4, you take 0.2, you take 0.4. In this case, it actually doesn't work out. Yeah, and with a parallel through 0.3, and you extend it, and then actually your profit target would be that median here or the top here, which we in this case don't touch. Yeah, so it's not like the channeling technique, because it's something that just is a helping tool, is not that perfect. In this case, the Fibonacci extension would have given you the better target. But yeah, it just comes down to developing practice and in looking at the chart. Yeah. Anyway, we jump back into the DJI. So here we jump DJI. Yeah. So what do we have? So we have our wave 1 here, we have our wave 2, and we're now waiting for wave 3. Now, because we have a base channel here, so wave 0, 2 with 0.1, it means we are confirmed in wave 3 once we have a breakout to the bottom. So we would expect the breakout to the bottom. Yeah. Now, then we can also again use a Fibonacci extension here, just from 0.1, and basically would have our profit target at least at the 138.2 for wave 3. Sorry. Let's draw that back further so I can move the. Which would be the price level here, obviously in the future. So here-ish, what is that, like 38.2, 27,000 roughly. So yeah, probably should go further because again, we are expecting a breakout. So I have to move those, sorry, and that we can delete for now. So the 27,000 will probably not work out. It can work out, so it can still be the longest wave if it goes somewhere here, and we then basically are around this mark here, 138.2 without the breakout. Yeah, again, Kennedy channeling technique is not perfect, but then it would limit wave 4 because wave 4 cannot go into the area of wave 1. So it would limit wave 4 to be, to not reach that median at all. Yeah. So more likely, I would say we will see the 26,000 mark, which at least would be a breakout, or in wave 3 here drop even further. So that would then be the 20,000 mark. Yeah. So that would then be a definitive breakout from the channel, where then our wave 4 would potentially take us back here. And then our wave 5, depending on when that happens, will then give us a profit target that's further down, or at least recover 70%, but probably is further down and takes us down here. Yeah. What am I doing on a 5-minute chart? Should I go for one? Now, technically, you should start always with the biggest timeline, because the bigger thing to know is which wave are you in. For example, so if we zoom out here again to monthly. And then we see, as I said, I don't have a lot of data here. So we would look at this and we would maybe say 1, 2, 3, 4, 5. And we would think that we're now expecting a small wave 2 that only corrects till here because we're lacking the data. If we, however, have the full data, we see, okay, hey, it actually looks more like this. So 1, 2, 3, 4, 5. And probably in logarithmic scale, it will look much better, as you can see. So, I mean, the points don't align, but 1, 2, 3, 4, and then 5. And we also have, there's a rule of alternation. So wave 2 here is a combination of a corrective pattern. So it's like from 1 to 0.2 potentially being here. Could also be that 0.2 is here in that case, yeah, to be honest. Yeah, like, but yeah, like, so I'm gonna put it here for now. Yeah, like, but so if wave 2 would be here, that short one, I mean, considering the time frames, it makes sense that it's like this. Then we would expect something like a flat, which would have a new high as wave 4. And yeah, if it's vice versa, it's vice versa. So there's rule of alternation. But it gives us the idea that, okay, here we have our all-time high, wave 5. And because we can label this out here as like 1, 2, 3, 4, 5. So we finished that 5th wave, which means we're now expecting the correction that takes us down, as said, into that wave 4 territory. Yeah. And that way, you know what to look for. You know that now you're looking for an impulse that goes 1, 2, 3, 4, 5 that will take us down here. Yeah. If you start on the 5-minute chart, you're going to have a hard time figuring out where you are. I mean, it's going to be obvious in certain situations. Again, some things you just look at, and that's going to be 1, 2, 3. That could be 3, 4 with an extended 5th, or it could be 3, 4, 5. Yeah. So, which then, the moment you see this, you know, okay, now we will have a corrective wave that will take us in the area of wave 4. So you can close your positions. I mean, obviously you need the profit target, blah, blah, blah. But if you don't have a position, you can now set your buy order somewhere here, here, and a little bit below. Yeah. And you would basically enter then buying here. And so in that area here, and you would then see, okay, that here maybe the correction already ended, or it can go sideways a little bit, but then we actually will have the next wave. That's what you would get from just looking at this. But if you don't know the bigger picture, then while this definitely is an impulse pattern of some kind, it could be the impulse pattern that is like, I don't know, wave A of an A, B, C zigzag, but it could also be wave C of a zigzag. So there is somehow wave B, C, or flat in that case, where wave C doesn't recover that much, which you would then expect, oh, we go here and then we go up, when in fact this now should be 1, 2, 3, 4, 5, and you go down. Yeah. So what's important here is, I mean, even if you do it wrong, even if you start on the 5-minute chart, yeah, and you would say, okay, this is now 1, 2, and you're gonna buy and you're gonna wait for it to go up. So you would say you buy the Dow Jones Industrial Averages right now. I'm gonna sell it, but you're gonna buy it because you look at just the 5-minute chart and you're like 1, 2, 3, 4, 5, and now maybe A, B, C, correction finished here, a little bit below the wave 4 territory. Now we go up. Yeah. The benefit would be your stop loss would be here. So your stop loss would be at 33,164. So you have almost no risk, and your take profit. No, sorry, my mistake. Your stop loss would be here because you are saying it goes up. And so you would have like 33,000 as your stop loss. So you have like, what's that, 1% risk. Whereas you say, okay, it's now wave 3. So 1, 2, 3. So you're expecting to go far below, above this point. Yeah. So you have like 1% risk with like 4 or 5% upside, at least to this point, and more to here. And so your risk reward ratio is great. Although you got it wrong because you ignored the bigger picture, yeah, you're eventually gonna hit that stop loss, but your loss will be limited. And the moment you hit the stop loss, you will notice, okay, something's not right here. We shouldn't correct further than wave 4. Then you might assume, okay, what if wave 3, 4 is actually like this? The rules are still satisfied. Wave 3 is not the shortest. So you might then say, okay, Pooh, I'm gonna buy again down here, yeah? Or you zoom out and you notice, oh shit, we're actually in a downward overall trend, so I got this here wrong, yeah? Yeah, but so it just comes down to practice, and you will get it wrong. I also have trades constantly that hit the stop loss. The big advantage of Elliott Wave Theory in that case is really just that you, we were at 2 days, yeah, that you, you have a definite stop loss. You're not guessing. You know, okay, this is your labeling, and if it's right, you're gonna. We were further in, I guess, yeah. So let's go to 1 hour. No, let's say 4 hours for now. So you're not guessing like, okay, am I right? Am I not right? Yeah, whatever, I'll wait it out. But if you hit your stop loss, your labeling was wrong, and you go back to the drawing board and you label again, and then you see how it goes from there. Yeah. Now we didn't make much progress here, unfortunately, because we sidetracked into Elliott Wave Theory explanations. I should learn to remember which way is zooming in and which way is zooming out on my mouse. Yeah. Should probably invert the mouse wheel because I really always do it the wrong way. But yeah, so basically Elliott Wave Theory says, okay, we finished wave 2, we are now in wave 3, and which means the assumption is that wave 2 finished, yeah, and which is an important aspect here because if it loads, let's go here, yeah. So because if in the DJIA wave 2 actually finished, if we look on the daily chart, so they say wave 2 finished here, that means we have now the progress of wave 1, 2, 3, 4, 5 as a leading diagonal, which makes up wave 1, 2, 3, 4, 5 of the next thing. Yeah, and if this is 1, 2, 3, 4, then this here should also subdivide again in 1, 2, 3, 4, 5, which means I'm gonna short the DJI now by investing in the SRTI. No, that's for the Russell. By investing in the, why do I have for both the Russell now open? Up, back. Okay, let's see, DJI. Okay, which one do we have for short for DJI? DJI short. Pro shares short. SDAO, yeah, that makes sense. Yeah, short DAO would be the one that we're looking for. Do we have them on eToro? Yep, we have the short DAO. So just confirming the chart. Yeah, which means basically I will now buy the short. I will now buy the short or open a short position with like probably 5% of the portfolio or something like that in the Dow Jones Industrial Averages, yeah. And if we consider that this is supposedly our wave 2, then that's where our stop loss is going to be. Now, if we go here and look at the SDAO, since it's not directly shorting, but it's an ETF that shorts it, the price is different and it's slightly leveraged. It should be slightly leveraged, I guess, yeah. Yeah, I don't see if it's leveraged here, but we'll assume that it's leveraged, which means that there will be a little bit of discrepancy or difference in how it moves, yeah. And again, it's inverse. So you see overall it looks like this because the Dow Jones has been growing, and now here in December we have the all-time high, which is the all-time low here. Then we have 1, 2, 3, 4, 5, and then we have A, B. Where do we have point C here? Our wave 2 ends here in December, yeah, and that's our stop loss. But since we're investing here, we have to pick that's weekly. Let's check here. What's our December point here? It's the 13th of December, roughly. So that's gonna be our stop loss, which is 13th of December is around here, yeah. So that would be 12, 19. So that's going to be our stop loss, where the low is 23.38. So we're going to invest here. No leverage. Our stop loss would be, what's that, 20%. So, and quickly have to check home. Now, also, while I'm checking that, to be fair, this will increase the temporary volatility of the portfolio because then we are in a third index where we're shorting it. So we have so okay, that should be, yeah, let's start with that. Okay, so, and if we say around 20%, then that would be that. And our take profit in this case would not be needed because we would actually, or yeah, for that we can look here. Our take profit, as said, would actually be, or not a retracement, but an extension, would actually be if we take this here, and then our take profit would be, in this case here, around 27,000 at least. And it's going to be tricky because in the leveraged one, I'm not sure if we have Fibonacci's here available. Do we have them? No, I don't need a symbol to compare. I need an indicator. That's for... it's, yeah, the Fibonacci's unfortunately from, I need the Fibonacci extensions, but they don't have extensions. Yeah. So they are using TradingView here, which is a little bit of a pity because technically what we need is this here. But we would need it actually as an extension. So we would need the, okay, just to reverse it here. So to get the extension part, got it. And enable that stupid magnet so it actually locks in on the high points. But again, because this one here is leveraged, it's slightly different. And we're missing the 138.2. So we need a, is it there? One, it's not there. Okay, so let's edit here, 1.382. So that would be here. So our take profit, I wouldn't put it at 50 because again, this is leveraged, but we probably would put it at like, oh, we already at 43. No, that was 43. We're now at 27. Yeah. So I would put it at like, if we say twice would be 54. That's too much. Yeah, I'll actually today I will wait for market open to enter that position. Yeah, because then it's like easier because then I can use the actual price levels. Otherwise, I have to enter amounts. So invest as DAO 5%. Just keeping notes here, 5% with stop loss at, what did we say? We said it was December. So here the low was 24.71, and take profit around, or at, yeah, let's say at 45. So our stop loss basically is, as we can see, around, what's that, 10% lower, a little bit more, so like 15% risk or so, maximum 20% risk, where our take profit is almost 100%. Yeah. And that's what we're going to invest in, starting with 5% of the portfolio. It might drop a little, and again, because we have our stop loss, and that's actually the issue here that you see here, because here we have a flat corrective pattern, there we have a lower low, yeah, but also because it's leveraged in quotes, yeah, there will be movements that are a little bit stronger. So, but it should still work out with the 24.71 stop loss, so like 10 to 20% risk, with close to 100% reward. And yeah, then we actually are already finished for today. I'm just going to update the stream real quick. So yeah, DJI, Dow Jones Industrial Averages, Analysis, and Forecast. Such long episodes, title too long, okay. DJIA, then do it like this, okay. And then we're gonna have new note in my Google Sheet, and today is the 31st of May, so May 31st, 2023. We are in episode number 29. And yeah, so expected wave 3 towards 17,000 in the DJI, so around 50 in the short ETF. Yeah. So we'll see how that plays out. But basically, if I turn out right, we will relatively quickly recover the 20% that we're currently down year to date, and by the end of the year should look at a decent profit again. And if I turn out to be wrong, then then we'll hit our stop loss here, take a small. So if I invest 5% and we have 20% risk, we're talking about like 1% loss for the portfolio that we risk here. But 5% upside if we hit that profit target. And so anyway, for today that would be it. Akashi says, my bad about that. You can continue with the video. Thank you very much. In the gaming streams. Yeah, it's hard in the gaming streams because we don't have charts in the gaming streams, so it's not that I can show you there like how I would do it. But to be fair, I really reading the book is a start, and then just labeling charts for yourself. Even if you use a demo account, so you don't trade with your own money, but then just use a demo account to make trades based on your labeling and see how it turns out. You will sometimes be wrong. Again, corrective patterns are a bitch in quotes. Yeah, I said like I usually don't consider that there could be a corrective pattern that has a new high. So I'm done trying to make it work like this 1, 2, and that then usually screws me over. I mean, because then my correction is actually wrong because I then have a problem labeling this as wave 2. So if I would do it like 1, 2, and then I cannot label that properly as a correction. And so I'm okay, the correction is not over. So I'm expecting A, B, C. So I expect it to correct more, which then doesn't check out because we would then have a new high and blah, blah, blah. So it's like, corrections are the challenging part. It's nice once you have figured out where the correction ends, like potentially in GameStop, then here. Yeah. So once you have that figured out, actually, let's take a look here just for the fun of it. 38.2, so it's like amazing. It's really incredible. Once you have figured out and you know, oh, now we are likely in a 5th wave, that's actually the point where you then can easily work, because then you know, okay, 1, 2, 3, 4, 5, and even if you have a problem identifying wave 2 here and wave 4 here, you know wave 5 should recover at least 70%. So you know that you will at least go, I don't know, somewhere till here. So that's already 100% profit target that you can have. And if you're not sure about the rest for it further because you have trouble labeling the rest out, you just add a trailing stop loss or so, and while your risk is limited. So right now, of course, the risk would be a little higher because we have, what is that, like 8? You have around 30% risk right now here with around 100% profit target. So 1 to 3. So if you are 1 to 2, and so if you 1 to 3. So if you make trades like this and you're right, I don't know, 2 out of 3 times, or even only 1 out of 3 times, you would at least be break even. So anything if your ratio is more than 33% correct trades and all of them have that ratio, then you actually are profitable. And that's what it comes down to. So you don't have to be right all the time. You just have to be right more often than you're wrong. Or your profits or your risk reward ratio has to be on average so good that even if you only write 10% of the time, you still make a profit because your profitable trades will be so profitable and your losses are always small. And that's actually what it's all about, to identify 0.2, 0.4, or if you want to go short, identify 0.1, 0.2, so that you then can short it down. Like with ideally you want to trade third waves. They're usually the strongest outside of future markets. So we actually have the nice situation here. We're now looking at a third wave according to Elliott Wave International, which means our risk is limited with that 0.2, while our upside is relatively big. If we are wrong, so be it. We take a small loss. If we are right, our profit is so much bigger. And we can try to label out that 1, 2, 3, 4, 5 that might play down there. Now, technically, it could be that it turns out that wave 2 hasn't finished here, but wave 2 is some kind of weird combination that drags on further here. But then, it shouldn't build a new low or a new high here. So we should still be fine. It just means waiting out till it finishes and then we go down. Anyway, I'm going to finish that here. I may or may not throw in another live stream on my other YouTube channel today about the changes that Hai announced just an hour or two ago on Telegram and maybe also via email already. But not sure about that. Then other than that, then yeah, like we'll see each other probably then tomorrow in Common Chaos Live on my main YouTube channel or in another episode of Daily Market Mastery. So thanks everyone that tuned in. I hope you were able to take something away. I know we weren't super focused on the labeling of the DJI today, but to be fair, we had that small cheat sheet, so makes it easier. And yeah, like, so hope you all have a great rest of the day, and then